Scarlett.
Yeah, the retail story has been fascinating so far this earnings season because it really shows a divide between winners and losers and investors trying to sift through the rubble there. All right, Abigail Doolittle, thank you so much. Abigail, of course, mentioned Nordstrom, so let's talk about them because the family behind the company is bidding to take it private for $3.8 billion. For more on this, let's bring in Mary Ross Gilbert. She is Bloomberg Intelligence senior analyst covering retail and department stores. Mary, this is not the first time the Nordstrom family has tried to take it private. From where you sit, what's the difference? What's new in this latest attempt?
Yes, so Scarlett, you're absolutely right. The first time that they tried to take the company private goes back to sort of that 2017, 2018 timeframe when they were offering more than 2x the price. So that's what's different this time. And this time around, and that time there was a premium involved. This time around, there's no premium. In fact, you'd almost say it's almost like a take under. So that's what makes the transaction different. Now, when you look at the letter that the company submitted, they're saying, well, really, it's a 35% premium to where the shares were trading in March when the first proposal emerged that the family was looking to take the company private. So that's the big takeaway there. And you'd say, well, maybe this could bring in other bidders. It's kind of an interesting story, but I mean, when you've got the family, consolidated shares amongst all the family owning about a third of the stock. Yeah. And now we also have another investor in here that got involved a couple of years ago, and that is the Mexican retailer Puerto de Liverpool, right. And they are an operator in Mexico of department and specialty stores, and so they own about 10% of the stock. So you basically have 43% locked up. They just need another 23 to 24% to make this transaction happen.
Yeah.
And in terms of the financing, that's all disclosed too. Liverpool's looking to pony up $1.2 billion in cash plus contribute their shares. So it looks like, and then the Nordstrom family is going to pony up about $500 million. So it looks like they're going to need to raise only about $500 million in cash and incremental debt. And the existing debt of about $2.6 billion will be assumed. So this is really, the size of the transaction is really more like 6.6 to 6.7 billion. That's the size of the transaction.
That's really great context there. So you had mentioned that that did not go through, and part of it was because shareholders didn't approve it, and that now that the Nordstrom family is coming back in, perhaps there might be a bit other bidders emerging. Who would be some other natural bidders here for a company at a time when department store chains have lost relevance and are struggling to capture some market share or recapture some market share?
Yeah, Scarlett, it's a really good question because this is a unique situation because you have the family involved, but also it's smaller. So when you look, they have under $15 billion in revenues. Macy's is somewhere around $23 billion. And so, and the other thing is they have two businesses. Mm-hmm. They have a full line sort of department store, but there's only 93. Macy's has over 500 stores. Of course, they're going to look to shutter about 150 of those.
Yep.
And so, and those stores, they'll probably look to maybe close maybe about about 10% of that store base. So they're going to bring that down, maybe somewhere around that 83, the low 80s. But they have a fast-growing off-price segment.
Yeah.
And that's where there's a lot of opportunity. And now that they've reset that business, they've cleaned all the inventories, the systems are in the midst of getting improved, so they'll be able to do ship from store. And they also have an e-com capability. And the only other off-price operator with e-com is TJ Maxx, which is TJX Corporation. So
great point.
Most all of their concepts have an online component to it. So that makes that an interesting part of the story. Sure. And we've been watching the full line stores improve with the way that they're moving merchandise around in the stores, bringing in new brands. So they're really differentiated versus some of the old line department store operators, and thus the difference in their performance in the second quarter.
Mary Ross Gilbert of Bloomberg Intelligence, really appreciate your joining us with your expertise. Thank you. Coming up.